Financial ratios are key tools used to evaluate a company's performance, financial health, and operational efficiency. They are calculated from financial statements, primarily the income statement and balance sheet, and grouped into several broad categories. Here's a detailed breakdown of the main types. Number 1, liquidity ratios. These measure a company's ability to meet short-term obligations. A current ratio. Text current ratio equals FRAC text current assets, current liabilities. Indicates whether the company can cover its short-term debts with short-term assets. Ideal range 1.5 to 3 number #B. Quick ratio. PIX. Text quick ratio equals FRAC text current assets, text inventory, text current liabilities. A stricter measure than the current ratio. Excludes inventory which may not be easily liquidated. 2. Solvency ratios. These show how well a company can meet long-term obligations. Is debt to equity ratio. Text debt to equity equals FRAC text total debt, text shareholders' equity. Indicates the relative proportion of debt and equity used to finance the company. B. Interest coverage ratio. Text interest coverage equals FRAC text EBIT. Interest expense. Shows how easily a company can pay interest on its outstanding debt. EBIT equals earnings before interest and taxes. #. 3. Profitability ratios. These assess a company's ability to generate earnings relative to revenue, assets, equity, etc. #A. Gross profit margin. X gross profit margin equals FRAC text gross profit text revenue times 100 #B net profit margin. Text net profit margin equals FRAC text net income text revenue times 100 #. C. Return on assets. Text ROA equals FRAC text net income text total assets times 100 #D. Return on equity. Text RO equals FRAC text net income text shareholders equity times 100 ***. 4. Efficiency ratios ***. These evaluate how effectively a company uses its assets. A. Inventory turnover text inventory turnover equals FRAC cost of goods sold text average inventory #. B. Receivables turnover text receivables turnover equals FRAC text net credit sales text average accounts receivable. C. Asset turnover ratio. Text asset turnover equals FRAC text net sales text average total assets ##. 5. Market ratios. These relate to the market value of a company's stock. A. Earnings per share. EPS equals FRAC text net income text preferred dividends text weighted average shares outstanding ##. B asterisk asterisk price dash to dash earnings. Ratio asterisk asterisk text PE ratio equals frac text market price per share. Earnings per share hash hash C dividend yield. Text dividend yield equals frac text annual dividends per share. Text price per share times 100. Would you like examples or a comparison of these ratios for a real company?